This is the last earning report for the day on Thursday. I'm 100% wiped out and still super drunk from the Budweiser one. This company here scares me a little bit. You know what? They're too big, too spread out, and in too many segments of business that I just don't understand. I'm not a computer engineer. I'm not an astrophysicist. I don't understand all the things that Intel does, but Intel does a bunch of stuff. They've got their fingers in far too many pies for me. Keep your filthy robot finger out of my pie. Their earnings per share today was 72 cents, beating the street by 4 cents. Revenues of $14.76 billion, beating the street by $350 million. That's up 9.1% year over year. Their client computing department up 3%, their data centers making 3.3% of the revenue, programmable solutions bringing in 3.5%, and a few of the other segments were relatively flat or just around flat, just up. There was not a lot of losses, but it's a lot of marginal gains, and we've talked about this with companies like IBM before. Intel's another one of those. There's a lot of margins that they want to make, but they're huge already. They own this space. There's a couple companies that fight for a little bit, but I mean, if you go out and buy a already pre-built anything, you're going to have Intel stuff inside it. You could go buy a coconut. It's got an Intel processor inside of it, I'm sure. Their notebook platform volumes are up 14%, and the average sale price from those is up 6%. So Intel's got it like that. They're making a little more cash any which way they can find. But again, this company is far too deep and convoluted for me. I'm not that intelligent to be investing in something like this when there's far, far more options of a much more streamlined type of business that you can really sink your teeth into. This here is going to take 8 years of study at an Ivy League school just to kind of brush the surface. But from everything I've heard, Intel, they make robots.